Hey, welcome to The Explainer. Today we're going to dig into something that's, absolutely fundamental for anyone dealing with business finances, the trial balance. So, picture this. The month is finally over. It was a busy one. You've logged every single payment, every sale, every little expense. But before you can even think about creating those big official financial statements, you've got this nagging feeling, right? Did I get the math right? Is there some quick way to double-check everything without going crazy? Well, that's exactly where the trial balance comes into play. You can think of it as the very first and honestly the most crucial checkpoint in the entire accounting cycle. So, what is it really? Well, the formal definition is that it's a list of all your accounts. We're talking cash, supplies, accounts payable, the whole shebang, and their balances at one specific moment in time. Its whole job, its entire purpose is to prove one simple but super critical thing, that your total debits equal your total credits. That's it. That's the goal. The best way to picture this is like a pilot's pre-flight checklist. Seriously, before you take off, before you go and generate those official reports like the income statement or the balance sheet, you run this check. You've got to make sure all the basic mechanics are working properly. It's a safety measure, pure and simple. Okay, so that sounds good in theory, but how do you actually build one of these things? Well, it's actually way simpler than you might think. It really just breaks down into a few easy steps. And I mean, it really is as straightforward as it looks on screen. First, you just list out every single account and its final balance, sticking it in either the debit or credit column. Step 2, you add up each of those columns. And then step 3, the moment of truth. You check to see if those two totals actually match. All right, let's look at a real-world example here from a company called Pioneer Advertising. See how they've listed all their accounts? And their balances are neatly placed in either the debit or the credit column. And then, look at that. The totals match perfectly, $28,700 on both sides. The books are balanced. Beautiful. And hey, pay attention to the order here. It's not just random. There's a specific sequence you always follow. Assets first, then liabilities, owner's equity, revenues, and finally expenses. Following this structure is what makes the trial balance such a clean, organized bridge to creating your financial statements later on. Okay, so your debits equal your credits, everything's balanced, you can pack up and go home, right? Well, not so fast. This is where it gets really interesting, because a perfectly balanced trial balance can actually be hiding some pretty big problems. And this is maybe the most important thing to remember from this whole explainer. Your trial balance can be perfectly balanced and still be perfectly wrong. It's a check for mathematical equality, that's it. It is not a guarantee that everything is accurate. So how is that even possible? Well, remember, it only checks if the totals match. It's totally blind to other kinds of mistakes. For example, what if a sale was never even recorded in the first place? Well, since both the debit and credit are missing, the totals still match. Or what if you accidentally post the same entry twice? Again, it still balances. Or, and this is a common one, let's say you correctly debit $500, but you put it into office supplies instead of equipment. The trial balance has no idea. The numbers match, and that's all it cares about. And there's a really important distinction we need to make here. An error is just an honest mistake. An irregularity, on the other hand, is when someone intentionally misstates something. We're talking about fraud. The trial balance is not a lie detector, folks. It won't catch either of these if the person doing it is clever enough to make the debits and credits balance. But okay, let's flip this around. What happens when the numbers don't match? Well, that's actually good news in a way. It means the trial balance has done its job and waved a big red flag. So what's your game plan? Thankfully, you don't have to just stare at it and panic. There's a clear diagnostic process. Step 1, and don't laugh, just re-add the columns. You would be shocked how often it's a simple calculator typo. If that doesn't work, there are some clever little tricks. Check if the difference between the two columns is divisible by 2. That might mean you just put a balance in the wrong column. But if the difference is divisible by 9, well, that points to a very specific and very common mistake. This little trick is a clue for something called a transposition error. It's what happens when you accidentally flip 2 digits around. So say you meant to type in $12, but your fingers typed 21. What's the difference? 9. Or maybe you typed 45 instead of 54. The difference? Again, it's 9. So if your total difference is divisible by 9, that's a massive clue telling you to hunt for one of these flipped number mistakes. Now, I know this can all start to feel a bit like a dry accounting exercise, but trust me, Getting these details right has absolutely massive real-world consequences. In fact, it was a series of huge accounting scandals that led to the creation of the Sarbanes-Oxley Act. That's a major federal law designed specifically to hold companies and the people who work for them way more responsible for making sure their financial reporting is accurate. The stakes are incredibly high. Just look at the case of Fannie Mae. When they had to announce a series of major accounting errors, it sent absolute shockwaves through the market. The quote here says it caused alarm among investors, regulators, and politicians. And why? Because it made everyone wonder what other huge problems might be hiding in the supercritical home mortgage market. And that's not just a one-off thing. Bank One got slapped with a $1.8 million fine because its accounting system was unreliable. And get this, at one point, Waste Management's records were such a mess that 10,000 of its employees got incorrect payslips. You can see how fast these errors lead to both enormous financial penalties and just total operational chaos. So let's bring it all home. When you put all this together, what's the ultimate role of the trial balance in stopping these kinds of disasters? The crucial point is this. You have to remember what the trial balance is and what it isn't. It is your essential first line of defense. It's that first checkpoint. But, and this is the big but, it is absolutely not the final guarantee of accuracy. And that, of course, leaves us with one last really important question. If the trial balance is just the first checkpoint, what comes next? What are the other steps you need to take to make sure the books are truly 100% correct? What catches the errors that a trial balance just can't see? Something to think about as you dig deeper into the world of finance.